Hi, everybody. This is Aaron Spool here with Eventus Advisory Group. I'm with my good friend Ken Bagner at Sobel Co. We put together this SBA webinar because both of us have been helping. We're both concentrated on mid-market, small and mid-sized businesses. And what's happened is that we've, over the past, with the CARES Act happening, we've helped a number of firms, not only just our clients, but just any firm that's needed help. We've helped a number of firms get through the process. And now that EIDL is out and PPP is out, and the funding for PPP has, this is April 23rd, 2000. The Senate has passed, but then the House is hopefully about to pass more funding for PPP. A lot of questions have come up, especially technical questions. So we set up this webinar. It's only going to be a half hour. It's for both Ken and myself to help answer. What we did is actually, Eric, you want to switch the page here? There we go. Awesome. So basically we're here we put this webinar together to answer a lot of questions. So here's why. So Eventus, that's me. Fractional slash outsourced finance and accounting firm, and Sobel CPA, Sobel Co. is an accounting, audit, tax, and advisory firm. So as I said, we both serve the small and mid-market sized businesses, helping a lot of people together. By the way, there's a great resource that we maintain. It's called the Business Emergency Room Master Doc. We also do a Business Emergency Room webinar weekly. But if you go to businessemergencyroom.com, it's a curated crisis resource. Basically, it'll have all this data here. This webinar will be posted there. A whole bunch of other resources that we're mentioning. Ken from Sobel has a lot of awesome resources that we're also posting through there. It's incredibly helpful. So let's switch to the first page here. So these are the top questions that we got from all of our clients, people we work with. So if you had not applied for PPP or haven't gotten your money, so that means you've applied, but you haven't gotten your money. So the top three questions, the first one is, what should you do if your bank hasn't been treating you like a priority? So I'm going to have my own comments here, but a lot of this is I'm going to be putting to Ken. So Ken, so what's your opinion of this one?
Yeah, so a lot of the banks, unfortunately, during the process of opening the PPP, the program got rolled out very slowly, and they weren't set up, and they unfortunately missed most of the program. I'm not going to go through bank names, but I'm going to tell you 5 or 6 major banks were not really up and running, and they didn't tell their clients they were not up and running. And then their clients found out, even though they thought their application was submitted, that it wasn't. So now I believe most of these banks have the applications ready, submitted to go, the large banks. But the question and the problem that you have is that you don't know where you are in line. You could be number 85,222 on the application in line, and there's only enough money, as I understand, for about 25% maybe of the applications left over. So you have like maybe a 1 in 4 shot. What I've been seeing clients do is switch to some smaller institutions that could prioritize them better in order for them to be able to receive the second round of funding. Now, I will hesitate for a second because the online, it's going to be interesting what they do here, because the larger banks now have their online systems set up. So the files are going to be submitted right away electronically. How quick they could submit that, I don't know. But I would think the smaller banks, I've heard as well, have also online direct systems as well set up. And if they're all submitting at the same time, I assume the smaller ones will probably go through quicker. Like, for example, I know one local bank that's a well-known bank has maybe 100 applications to submit. So, if you could get in with the local bank, that's great. The one thing they may ask is they may say, well, geez, we want a whole banking relationship with you. You might have to navigate through that, and I think you can, and work through to see how that works. But you do need to get a know your customer set up in order to be able to get a bank account, because money has to be wired into the account. The last thing I'll say is, should you file more than one application, which is the second question here, and your odds of receiving money, we already talked about. Well, a lot of lawyers are saying, no, be careful, don't file more than one application. But from a practical perspective, other banks they've bounced back and the first application's been accepted. So whatever comes in first, you can almost file in multiple banks. The banks do the work. They don't want you to. They're going to tell you, don't file because I want you, if you're going to file with us, you need to withdraw all your other applications. You can't even withdraw your applications from some of these large banks because the relationship manager doesn't contact back with the back office, and they can't even find where the files are to withdraw the actual application. So even if you wanted to, it might be a challenge. So again, you have to determine what you want to do. But if I'm a guy rolling the dice with the odds, I'd throw my dice on the table with a smaller bank at this point rather than a larger one.
So I'm going to add to this here. What I've seen is that's interesting. One thing is Amex. So American Express has just become an SBA approved lender. So they've been rolling out a ton of applications. So that's another way to go. Usually I don't mention like great names, but I've just found that so interesting. I'm not endorsing Amex at all with this. It was super very new. They just did this. And so I'm getting some feedback there that they're taking applications. And then I would agree with you. I think the strategy is if you have a big bank relationship, find a small local bank, because odds of you getting through the know your customer bank setup process is quicker there. I don't think it's a good idea to go to another big bank because they will not be able to even process I've been told by the big banks, don't even try. If you're not a client of ours, we can't take you and get you through the SBA process.
And if you are a client, there's no guarantee. I mean, we're talking about I have some very large, they're not just small companies, they're large. They're in the hundreds and hundreds of millions of dollars of revenue. They're not like billions of dollar companies, but they're not being treated as a priority either. So you just don't know where you are in line.
Yeah. Let's flip to the next side here. So the next one, here are the top standard questions. So if you've received your PPP funds already. So the first one is like, if you're still waiting on an SBA EIDL, right? So that's the non-PPP. So PPP is about, it's specifically funded by the Senate, even though the EIDL as well. So what does it mean if you received your PPP, right? So if you're waiting on the EIDL and you've already gotten your PPP, what happens there?
Okay, so if you've already gotten your PPP, you'll get I've been seeing in the last couple of days, the $10,000 advance actually go through with a lot of clients. That $10,000 advance that you do get, if you haven't even gotten that yet, because that's the first phase that was supposed to happen within 3 days, that will be applied against basically any forgiveness that you do receive on the PPP program. So you get a grant for that and you apply it. You could also still get your funding from EIDL. You just have to be very careful how you use the money. You have to use the money for different purposes, which is not salary, rent, or utilities, basically. You need to use it for maybe to refinance your debt. That would probably be a good way to use it because the interest rate is 3.75% for 30 years. So you might want to consider using it for that purpose when you receive it. But you could definitely have both the PPP money and the EIDL money as well. When you do receive it, that's okay.
Yeah. So the next three are the classic about loan forgiveness. So PPP has a huge aspect of loan forgiveness. And so the questions, these next three questions are roughly somewhat the same. So how should you track loan forgiveness? How should you set up your systems to track PPP spending? And does loan forgiveness actually work? How does loan forgiveness actually work? I'm going to comment a bit on this and I'll punt it over then to Ken. It's just like from a tracking perspective, there's really two ways. Either you can do it manually or you can create, if you want to get really technical with your GL, a separate GL account. You can actually do that and have everything hit there if you want to say that your exact PPP spending. However, a lot of your PPP spending is payroll. And so all of your standard things that you have for PPP from a payroll perspective, like for any type of payroll perspective, you could just use. You don't actually have to create a separate general ledger account for a lot of stuff. I think that I'm never much of a fan of setting up new chart of accounts unless you have to. I think that you could track a lot of this stuff, obviously depending on your size and complexity, just as you're doing the expenses. That's my own personal opinion. And that's a lot of the advice that we've given out to people. Because I
agree with you, Aaron. I mean, so some clients are worried that, they should show the funding separately, and it doesn't matter. You're going to give payroll reports to the bank. The bank is the one who's going to be the one approving this, not the government. So they're going to ask for your payroll reports. Remember, it's on a 56-day period, so it's from the date you get the funding. Now, some people have said, well, maybe I'll cut off my payroll because it's probably pay date and make a final pay on the 56th day. I'm hearing that they're catching on to that, and it might be almost on an accrual basis where, you know, you're going to take a look at your normal 56-day pay. So there's going to be some gyrations on this and how it particularly works. We did give Erin, which she's going to post on the website or the resource center, a way to track your 56 days of spending. There's a lot of things involved in the loan forgiveness. I'm going to give you an example of where you could really get crushed. Okay, so take an example where you have, let's say you receive $1 million loan. Now, on $1 million loan that you do receive, you can't hire back all your employees because you can't get your employees back to work. So let's say you pay $300,000 totally out during the 8-week period. So your pool is $300,000 of potential money that could be forgiven, ignoring rent or utilities or anything else. But if only 1/3 of your workforce is back to work, then what happens is the calculation, we have a calculator that we also are going to post on the resource center. It will reduce proportionally your forgiveness pool of 300,000 by 2/3 essentially, because you only have 1/3 of your employees back. So you only have 100,000 forgiveness on the million, which is only 10% of your loan, and the rest will be at 1% for 2 years. It's very imperative that you get your people back to work. What they have allowed is even during the 8-week period, because a lot of people are getting funding right now, and the 8-week period will end before June 30th. If you hire your people back by June 30th, there's no reduction in workforce. The issue is in the tri-state area, the question is, can we be back to work by June 30th? Yeah. We just don't know. So this could really, really affect what is going on. And also there's no rulings at this point of, let's say I hire them all back June 30th, how long do I have to hold on to them? So there's nothing to show on that. We've been checking the Q&A from the government every single day from the SBA. There's about 5 new questions added today. They added a question about not allowing public companies to have funding, basically. They said, if you're a public company, you should give the money back because you have access to funds from other places. So that's the latest Q&A that just came out literally like 15 minutes ago. But besides that, we haven't seen anything on how particularly they're going to look at this and figure out, you know, how you're going to be reduced in that matter. And there's other things, in fact, as well, just as we're going through forgiveness, it's the actual, if I prepaid my rent, what does that mean, right? So if I paid my rent already, should I pay my rent monthly? I think you might want to try to pay your rent monthly just in case, but it looks like it probably will be on accrual method. You do need to make sure your rent contracts are before 2/15, but we'll get into that, I think, later on in the slideshow.
Yeah, so a couple of things I'm going to add here is that one of the things I was saying is that it's realize that you don't have to track the exact dollar that came in. So if you got to say the $1 million, you do not have to put that in a separate bank account and track that. All it is that it's $1 million. Did you spend $1 million on proper things? So you could theoretically take that $1 million, spend it on something else, have another $1 million, and spend it on the proper things for debt forgiveness.
Correct.
The second is that while everyone is so concerned about debt forgiveness, one thing I remember, this is an incredibly low interest rate. So while it's not free money, granted you have to return it, if you don't have all this debt forgiven, then don't spend the money. Just get whatever part that's forgiven and give them the money back. And if you do decide to spend the money, you've now got an money at one of the lowest interest rates ever possible from a lender that is going to work with you. And then the last part it says on the head count, and Ken, this is what I've heard. I just want to make sure that if you see the agree, you don't have to, so let's say you furloughed some people, you don't actually, it's the head count isn't a specific identified to a person, it's a number. So they look at dollar amount of, so the SBA looks at it from a loan forgiveness perspective, from my understanding, dollar amount of payroll and number of heads, not Aaron Spool as the particular head. So it's not assigned to a person, it's assigned to a head count. I could be wrong. No, that's what I've heard.
They're looking at they're looking at your reduction in pay by individual, actually. If it's reduced more than 25% per individual, there's a calculation. You have to list every single individual out. And the interesting part about it is, you know, it's based on the prior quarter before you got the funding for the 25%. So you lose some of your loan, whether if you have a lower head count or whether you pay people who make less than $100,000 more, you pay them 25% of what they were getting paid beforehand, which is based on the first quarter before you got the funding, which is basically January to March. There's a lot of questions in there, though. Questions are like, what if I put bonuses through that period?
Yep.
What if I had major overtime because our business was killing it and we had orders going out the door and people were working overtime? How do you normalize it? The way the rules say right now is you annualize that quarter, but if you're annualizing a quarter that had high pay, that could cause a problem if now people are not working overtime. So we're not really sure on that end, but it is on an individual basis. On the head count, the way the rules work is this. You look at your April to June 2019 head count, which is full-time equivalent employees. That's what it says, which means 130 hours for part-time people counts as a full-time equivalent. So you look at all your part-time people, add up all their hours, divide by 130. Let's say you have 2 employees, or let's say you have 4 employees that equal 260. You have 2 full-time equivalents. You also look at the period between January to February 2020, the same method. You take the lower of the 2, and that's on our calculator that you'll see that's going to be posted in the Resource Center. And you compare that to your employee count during the 8-week period, same methodology on average. The exception to it, if you are lower, so if you're lower proportionally, you get a reduction in forgiveness. But there is one exception. If you hire your people back by June 30th, which I don't know, if we're not back to work in certain areas, maybe it's extended by Congress past June 30th, because it's not possible for restaurants to hire back their employees if restaurants can't open or barbershops can't open, for example.
So just to go back to that, thank you again, Ken. The one thing I'm trying to understand is, we've talked about head count. Is it actually tied to the person? It's because I always thought it was the concept of head, not individual person. So if I had 10 employees and one of them left and I hired a new person, and say for the exact same dollar, I'm okay by PPP is what I've been told. Perfect. Yes.
That's okay. I'm just saying the head count's not head count, it's full-time equivalent.
Yes, sorry.
You could hire any full-time equivalent back. They're not telling you have to hire the person back that you already fired because they were having performance issues.
Yeah.
They're not telling you that, but you need to have the equivalent numbers in order to be able to do it.
That's perfect. Yeah, that's the point I wanted to make. Perfect. Awesome. Let's hit the next slide. So the next 2 slides are the complicated slides. So this is like technical questions. So technical questions part 1. So how do you apply for payroll tax deferral with your providers, and how does this practically work?
Okay, so if you get PPP money, you could still have payroll tax deferral on the employer side of your Social Security. That's a 6.2% tax that you pay on your Social Security when you pay an employee, not the amount that you take away from the employee's salary out of their withholding. That amount, let's say it's $10,000 a pay period. It could be more, it could be less, depending on your payroll. It defers and defers and defers. If you don't get PPP funding and forgiveness, then you could defer till the end of the year. And then you pay whatever that bucket of money is. Let's say it works out to be $200,000. You'll pay that December 31st, 2021 and 22, half of it during those 2 years. So it's a deferral, as that says, not a forgiveness. Deferral basically at 0% interest rates. And if you think about it, your money's being at 0% is like around between like 18 and 24 months on average that you're deferring that money. Now, if you have PPP loan forgiveness, the minute the bank gives you a certificate saying you're forgiven on the loan, you have to stop your payroll tax deferral. You could do that Social Security deferral up to that point. If you haven't done it yet, go back to your payroll provider. What they'll ask you to do is opt into the program. And if you've already paid payroll, they'll accumulate how much you've paid, and your next net wire for payroll, they'll net out the employment taxes that you don't have to pay to catch you up. So it's definitely something that you want to do, because nobody at this point has been forgiven on PPP, because it hasn't been 8 weeks since anyone's been dispersed money.
Awesome. So complicated question number 2, or is there 6 here? So when would the employee retention credit make sense? So when would it not make sense? You want to explain a little bit to people like what the employee retention credit actually is?
Yeah, sure. So retention credit is if you can't get the loan, the PPP loan, you could take that. That's an alternative. It gets you up to $10,000 of wages at 50%, basically a $5,000 credit against your payroll, that you don't pay payroll taxes that you don't have to pay. So it's similar to deferral, but this is a forgiveness. It's a credit that's gone that you don't have to ever pay back. That's the difference between the two. You're only allowed to do it for the first quarter, basically from 4/1 to 6/30, unless your business reduces in the next quarter, the third quarter, compared to the prior year third quarter, more than 50% of gross receipts. So most people are going to be knocked out of the employer retention credit. You can't take the credit if you got a PPP loan, but if you don't get a PPP loan, then it makes sense. Not everybody's going to get it. So we'll have to look at, whoever doesn't, and then we'll be able to reclaim this credit. And then, from a standpoint of when it makes sense when you receive a PPP loan, like I said, you can't take it, so it won't work. But if you don't receive a PPP loan, obviously you should just start taking this credit. It obviously is something that's going to make sense. And what I've noticed, if you're looking and comparing the programs, PPP versus employer retention credit, if you look at the dollars are basically, you'll probably get 70 to 90% on average forgiven on a PPP loan if you have the same number of employees that you're paying, so you're still conducting your business. On an employer retention credit, I think it's like around 15 to 30% on the dollar. So there's no comparison which program's better. If you get into PPP, because if you're wondering which is better, get into the PPP. If you can't, that's a consolation prize, sort of, in order to actually be able to claim something. It's better than nothing, but it's probably going to be like 15 to 25 cents on the dollar, 30 cents tops. Once you hit 5,000 max on that credit, you're done. And if you don't hit 5,000 max on the credit for the first quarter, you can't go to the next quarter to hit that max per employee, and if you don't have 50% lower receipts compared to the prior year quarter. So that's where you come into a problem.
And I would just like to add, I'm going to kind of go back to this again. PPP is money you get now. So even if, and this is just my own personal opinion here, this is a concept of like debt forgiveness, but once again, you have cash in hand now, which I think is always more valuable than a potential cash not have to expend later.
The retention credit gives you, when you file your payroll for every week, you'll pay less payroll in. So that's how you get it right away. But, obviously you want to get a full big amount of money for the PPP is a much better situation, as you mentioned.
Yeah. So then the next question here, so this is also highly technical. So how can you maximize the credit against wages for paid for sick leave? And then there's 3 follow-ups here. So do you include insurance? What method do you use if you have a self-insured plan? And then do you pay ER FICA taxes on sick leave?
Okay. No ER FICA taxes on sick leave. Make sure it's not done through your payroll. Sick leave is if somebody is sick for the coronavirus, or they're taking care of a kid or child who's under 18 years old, whose school is closed because of the virus. So, from a standpoint of what you do to claim this credit, you want to make sure that you talk to your payroll provider and code directly what it is, whether they're sick for the virus or whether it's because their kids are at home and they can't work. And this is when you're paying somebody for this type of leave and they've already said, I can't work. So they're not working for you at home. They're just not working, but you're required to pay them if you have under 500 employees. So what you do is you're going to get a credit against all of the pay that you pay, but you could also include in the health insurance that you're paying proportionally, and I'll explain that to you in a second, and you could in whether you have self-insured as well. The way the insurance works is you could take it pro rata by employee, and you could take the total cost, divide by basically 260 days, and divide by the number of employees, because there's 260 work days during a year typically. That gives you your allowance per day for health insurance. So you take your wages that you're paying them, you take the health insurance, and then you also can take the Medicare portion of the employer tax, add those all together. That can get reduced against the taxes you have to pay, the employment taxes. That includes federal withholding, that includes Social Security, everything. And it will reduce basically dollar for dollar what you're paying to give you hopefully 100% credit on the wages. Now, the credit's maximized out if they're sick with the virus, $511 a day. If they're home with a child, you have to pay them 2/3 of their wages. So if you're paying them $300 a day, you have to pay them $200 a day. Whatever you pay them, the credit is limited up to $200 a day for if they're home with a child. So you have to just be careful with which category. So you got to talk to the payroll company, categorize right the employee so you get a maximum credit if they are sick with the virus, and make sure you include all these things appropriately in there so you maximize out the credit.
Fantastic. There's a reason I call Ken for any type of technical question, for among anything else I call him for, which is a ton. Let's go to the next slide here. All right, this is the last part, technical questions. Super technical questions. So is the loan forgiveness on a cash accrual basis for the 56-day period? We talked a little bit about this, but let's go a bit more. The whole concept, can you prepay expenses? What if you prepaid rent? And if you have and this is the more complicated one, well, I'll save to the end, the related party one. So let's not talk about that. Let's talk about the whole cash accrual basis stuff first and prepayments. And what's your thoughts on that? Yeah,
so my thoughts is the IRS is not going to let people prepay rent. They're going to put rules against this. If you try to load in your expenses, they've already put a 25% cap. So if you take your forgiveness, let's say you had $1 million loan, the most you could spend, you have to spend, if you spend $750 on payroll, the most you could spend is $250 on other expenses. So it's only 25% of the total expenditures. So that's how they've capped it. But they're going to be very careful on anyone trying to load through, I think, expenses. They'll probably make you look at your contract and amortize it over the period. That's my sense of how this is going to work. That's why they want you to have a contract in place before 215. The related party rent's an interesting one. There's no guidance on this yet, but I tend to think on a related party rent, as long as it's reasonable rent and it's fair market value in the area, I don't think you're going to have a problem. If it's egregious rent, there could be some issues with this. But again, there's a 25% cap of the total expenses, so your payroll has to be at least 75% of the forgiveness cost. Otherwise, the rest is not going to be forgiven. And that's the reason why they did this, because they don't want people front loading their rent and on utilities and all these other things into it in order to maximize and get 100% forgiveness. So what you kind of look at, and I look at it, if you're paying people the same way, right, you would, as before, you would have 8 weeks out of 12, which is about 66% of your costs. And you'd have another like 25% or so in addition, 20-something%. So you're in the 80 percentile to 90 percentile of forgiveness. That's so whatever you got as a loan, if you got a $100,000 loan, probably everything's forgiven except for 100 to 150,000 of the loan. Now, if you increased your employees' pay because you hired more employees, obviously you might get 100% forgiveness. So that could help. But otherwise, if everything remains the same, you're probably looking at around 85 to 90% forgiveness.
Great. And one thing I just want to keep going back to is that, Ken, you mentioned this before, and this is something that we've advised a lot of people too. The person, the party that's deciding if anything's forgivable is the bank. So there theoretically could be, we don't know this, I don't like the speculation, but that's why there's no standards yet, because each bank has to decide. So insert community bank might have different standards than giant global national bank, or so we don't know yet. So that's
and we saw that on the applications. All the applications were different between every bank. The requirements to submit documents were different. I just went through today, someone asking for bylaws to submit. They asked for the original operating agreement, and the bylaws didn't have the company name on it. So they said this is not good enough. And I said, I don't know what else I could give you at this point. We gave you bylaws. We gave you the operating agreement. It says the guy owns it. He signs the tax returns. What do you want? Like, what else can I give you to satisfy? So all the banks have all these different requirements. Some are just blindly submitting. The banker has to actually sign the application. I've talked to some friends of mine that are bankers. They're very nervous about signing the application, but they did put out rules that the banker's not going to be held responsible, even though they're saying they have to sign it. So it's kind of just a weird sort of thing of what does this all mean, right? On the back end, you start finding out that people did commit fraud, because any one of these programs, when you're giving away $700 billion, because that's where we're at almost now, there's going to be some people trying to manipulate the system, and the bankers are signing off on it. So that I understand why they're nervous about it, and it's a big issue.
So last question we have here. So what should you do to ensure maximum loan forgiveness? And we gave a couple of examples. So do you have signed rent contracts and others before, do you have signed rent contracts before 215? What if you paid out bonuses in the first quarter of 2020, or you paid out overtime, exactly as you asked before? So how does this all mean to the overall equation? And does the employee count, how does the employee count really work? We've talked a little bit about this each. Well, let's just kind of quickly review each one.
Yeah. Just to recap, as long as you have a similar employee count, and that's going to be interesting how the banks define that, right? Because you said each one may define it differently. The applications were head count, which was weird on most of the applications, where the law says full-time equivalents, which I described before. It's going to be interesting how they look at that. But basically, if you keep a similar count, you're okay. If your count goes down, your forgiveness pool goes down proportionally. What do I mean by that? It's whatever you spend. Some people are trying to say, well, it's based on the loan. It's not based on the loan. If I get $1 million loan and only spend $500,000, that's the starting point, $500,000. If your employee count goes down from 100 to 90, that $500,000 goes from 500 to 450 of forgiveness. That's how it works. If individually each person's pay goes down, who are making less than $100,000, by more than 25%, there's a calculation that's going to take place as well on how much you lose on that loan based on a reduction in pay. So in order to maximize this out, you want to make sure your count is okay. Now, the day of funding, don't worry about it, guys. If you have a situation where you can't get your employees back to work, and some of the issues are there's unemployment is higher than than actually they're getting paid working. So and that was an issue that came up for during the bill when it was being passed. There was some contention on that, and some of our clients are having problems getting their employees back to work. That's just a reality, because some employees just don't want to work, but other ones do, because they're like, you know what? Maybe I get more on unemployment, but I want to have a job full time, and I want to go back to a job that's steady. So that's also psychologically, that's a very important thing as well. So what we've been talking to clients about is a couple things. One, what are the things in the parking lot that have been in there for a long period of time that you haven't accomplished or you haven't done? If you could hire people back to do that, why not pay 10 to 15 cents on the dollar instead of 100 cents on the dollar to have them do those parking lot items to make your organization stronger? I have one client that's fixing a lot of things in buildings, I'll just say, without going into details of what they're fixing, and it's going to make their contracts be a lot better from a service standpoint in the future. And it just helps fix, problems that, potentially could come up, and, it helps them manage, future amount of problems, and they'll have less problems on the back end. That's something you may do. I have other clients that have a lot of administrative things in their parking lot that they're looking at that they need to do and need to work on in order to have their business thrive once everything starts and opens up again. Use those employees for those things if you think you could use them. If you can't, don't use them. Don't bring them back if you can't. Don't let this forgiveness tail wag the dog, so to speak. Yeah. What you want to do is run your business the way you need to run it. But what I'm just saying is try to think about being innovative on how you can use your employees and accomplish some of the things during this period that you wanted to accomplish for a long period of time, but just haven't. But if you don't have that, and that's not the type of business you have, then I got to tell you, then you should just not worry about the forgiveness piece. You should not pay people because you're going to be net paying them 10, 15, 20 cents on the dollar. And if you don't bring them all back, you might be paying 50 cents on the dollar for these employees or more, and you're paying them not to work. That doesn't make any sense. So you just want to make sure you manage this properly and talk to somebody like Aaron to get proper advice to go through this to make sure that you're managing your business in the right way.
Excellent. So let's flip to the last slide. We're going to wrap stuff up right now. All right, so contact info. So this will all be posted there. So obviously Eventus Advisory Services, that's us. We have our website there. You can email talk@eventusag.com, or me, or Harry is one of our SBA experts. Sobel & Co. We have Ken Bagner's information there. kenneth.bagner@sobelcollc.com. Also the Sobel website there. Once again, a shout out to all the stuff we posted on the Business Emergency Room Master Doc, which is the weekly webinar we have, and the Master Doc is businessemergencyroom.com. If you have any questions you want to, just definitely go on to that sheet, come to our weekly webinar. This is obviously a recorded webinar. If you have any questions, technical, you've got our contact information here. Ken, thank you again for everything. Obviously, you and I will be talking a lot, no matter what. And people out there, we're here for you. There are a lot of other people out there that are here for you. You're not alone. We're here to help. If you have any questions, concerns, contact us. We're here for you. Take care, everybody.
Thank you.